Welcome back for Commodities Market Update now. We have Oluwatomi Mayowa, analyst, financial derivatives company, joining us via Zoom. Great to have you on the program.
Thank you very much, Daddy.
So we're seeing volatility in the oil market again, as usual, and this time we're seeing Brent actually rising this morning. What's driving sentiment in the market? Is it still China?
Okay, so it's true that Brent price actually went higher this morning, and don't forget it lost about 5% yesterday on one stronger dollar. You know, the US Fed has actually raised rates by another 75 basis points, and that has actually strengthened the dollar. And you know, when the dollar actually strengthens, it means, you know, what happens is that, you know, oil price will actually fall, because we expect that oil price will become, it will become cheaper to actually buy oil with dollars as a result of that, and the strengthening of the dollar. And also, what also contributed to that decline yesterday was that, the China, the COVID cases in China actually, increased more than what it used to be before. And you know that China is a top importer of crude oil. And so investors were actually factoring that in. In fact, there were about 3 mortalities, as at yesterday. So all of those actually, drove prices down yesterday. And what was the top of it yesterday was that, there was a news that OPEC was going to increase oil production. There were plans for OPEC to actually increase oil production, by 500 basis points, which is about 1.2% of total output. But this morning we saw that, I think as of yesterday, Saudi Arabia came to, deny that talk, that they were going to probably increase, of which they even, had to emphasize that if they were going to even do anything, it was to cut down, oil production, which extent cuts, which is already at about 2 million barrels per day for November and December. They planned. So if there's anything they were going to do, they were actually going to cut, not to increase. And so that actually furthered the bullish sentiment in the oil market this morning.
And instead of an increase, they're saying they would rather cut. So do you think it would be a 500,000 barrel cut?
I think we saw about 2 million. I think they said they were going to cut it further. So that means it's not going to be lesser, it's going to be more, probably 3 million barrels. Because their forecast for demand is actually lower. So because of the interest rate hikes and the COVID cases and the zero COVID policy in China, all of that are actually winning the outlook for demand. And so they don't intend to actually increase production. It was very clear. Saudi Arabia.
Right. And looking at liquefied natural gas, we know that Germany, they're ramping up, plans on getting their floating LNG terminal. But we're seeing LNG price is up about 5.62%. What's driving that?
Yeah, very true. The price of LNG has actually increased. Although it's still quite less than what it was when the Russian-Ukraine war started. And we've seen that Russia has actually cut their sale of gas to the European countries, because as a retaliation for the sanctions on their economy. And so that was why prices, skyrocketed at that period. But now what we've seen it trend downwards initially because of the fact that the weather conditions in Europe actually eased. There was warmth, so it reduced the demand for gas and all of that actually. But now there's a forecast on colder winter in December, and so that is actually fueling the sentiment in the gas market. And this is actually good news for Nigeria, because gas actually accounts for about 14% of total exports. And so as a result of that, we should see improvement on our trade balance as a result of this increase.
And obviously we've seen gas and oil prices, hit, all-time highs, this year. Do you see them creeping back to those prices, going forward, or is it over, hitting those highs?
Okay, so I think for crude oil, based on what we said, like I said initially about OPEC's plan to probably cut further, in its next meeting in December 4th, and also considering the fact that the European countries have actually said they were going to ban Russian oil imports, as at December this coming December. All of that are actually supporting, tightness in the oil market. And so I think that prices will, trend upward because the COVID cases in China might later be, dealt with, as it usually is, because at the end of the day, it comes up and then they are able to get hold of the whole issue, and then demand will increase again. So I think prices will actually trend upward, but we may not see it go as high as 100 as it was, before, because of interest rate hikes. Because the the U.S. Fed has actually said they're going to continue to increase interest rates until they bring inflation to their target. And other central banks are not also resting about, reining in on inflation. So that would actually taper the pace of increase, actually. But since the supply tightness is still there, we're going to see oil price trade to about 90 barrels and all of that. Then for gas, the weather forecast, the colder weather winter for December would actually support price and gas.
All right, let's look at cocoa prices now. I see that's down about 0.77%. It looks like it's weather conditions there.
So actually, cocoa pricing has been a bone of contention between the industry, the chocolate industry, and also the top producers, which are Ghana and Ivory Coast. It's been a major bone of contention because what it is about the cartel and the premium they want to they are exerting on the industry to actually pay to farmers. Is actually bringing that contention, and these industries are not actually ready to pay that amount of money because talking about the whole cartel thing, because it's comparing it to oil, because that's the drive. The idea behind the oil is also what they want to establish. And so, but then if you look at it, the commodity we are talking about here is chocolate, and which it's made from cocoa. And it's when the cocoa is actually harvested, they have to be sold because they are subject to spoil. They can easily spoil, and so as a result of that, you have to just sell it. Without compared to oil, it's the oil that's always kept under kept in the ground, and they can decide to lock it anytime they like, and affects and be able to stabilize to influence prices. Unlike cocoa, it's not possible to actually do that. So they've been that bone of contention with the country. So we've seen that that thing actually affects prices of cocoa. Although weather conditions are also affecting cocoa supply.
All right, it's all about the MPC today. Final meeting, for the year. What are you guys expecting at FDC?
Yeah, so we expect that they raise rates again by 50 to 100 basis points. This time, it was about 150 last time at the last meeting. So they're going to be less aggressive. But the fact that inflation is still, increasing, and almost all of our trading partners have actually raised rates. And, the MPC would like to also narrow the interest rate differential between other trading partners, and also we want to ensure that there's no flights, capital flights. And so that's what will actually support that increase. But this time it's going to be less aggressive because month-on-month inflation has started declining. It declined for the third consecutive period, and the pace of inflation increases has actually declined compared to what it used to be about previous months ago. So that's why we're going to see that less increase in reduction in the pace of increase And much more, what's is more actually important, which the IMF also pointed out, is CBN's loan to the government, which should actually which they should start reducing, because normally it should be 5% of previous revenue, but we've seen it increase to about 22 trillion naira. So that's a lot, and that's quite putting pressure on prices. So it's something that should be noted that the MPC should also work on, the CBN should also work on, to be able to taper inflation.
Right. So much on the MPC's table today. We'll be watching out, for all of that. Thank you so much. That was Oluwatomi Maiwa, analyst, financial derivatives company. Thank you so much.